Hey, it's Gary, and I want to talk to you about how you can become a mortgage broker or a mortgage advisor, because I've had a lot of people reaching out to me and asking me after I did my video series around how mortgage advisors can make £250,000 a year, saying, how can I do that? How can I become a mortgage advisor? So I thought I'd just do a little bit of an introduction in case anybody wants to understand more about the industry and what you need to do in order to get to that goal. So to give you a bit of context, first of all, I became mortgage qualified in 2003. Now, I'd had several jobs up until that point, which were temporary, and I didn't really know what I wanted to do. And my dad said to me, why don't you go and work for a bank? So they had a job as a cashier locally, thought I would take that. And from opening customer accounts, I was good at getting people across to get their bank accounts open. So the bank fast-tracked me across within a couple of weeks to start opening bank accounts. Then once I got to that stage, I was really good at getting people across to the mortgage advisor and the financial advisor. So then they said, do you want to become a mortgage advisor? To which I said, yeah, why not? I enjoyed sales, I enjoyed building relationships. And essentially, the qualification that I did in 2003 is the same qualification that is available today. And the examinations are nigh on the same examinations that you do today. Yes, there are a couple of regulatory changes, but they're nigh on the same. So what I did, which you can go and do if you want to research, is CeMAP, C-E-M-A-P, Certificate of Mortgage Advice and Practice. And that is 3 examinations. There are other ones which you could Google, which are CF, 1, 2 and 3, or CII qualifications. Now, there are companies out there who can fast track you through your CeMAP qualification. You can contact the IFS and they will be able to give you the books that you can then go through, and you can self-teach and you can learn, and they say it takes around about 50 hours of learning. You get 2 massive manuals that you need to read, or you can go on the courses and you can pay, and within a week or 2 you can become CeMAP qualified. So CeMAP number 1 talks about all the regulations, all the rules, all the guidelines, everything that's really important in and around our industry. And that's ultimately going to give you the foundational understanding of financial services. CeMAP 2 talks about all the products: life insurance, critical illness, income protection, pensions, ISAs, mortgages, all the different options, interest rates, and takes you through a bit of product knowledge. CeMAP 3 is then case studies of how you apply CeMAP 2 in the real world to certain circumstances to make sure that you understand the product knowledge. So CeMAP 1 and 2 are multiple choice. There's an element of multiple choice in CeMAP 3 as well. So that's why it was good for me, because I was not particularly good at GCSE level, but I was great at GNVQ in business because it was multiple choice and coursework. Now, the one thing that the examinations don't do is give you real world understanding of how to do the job. They teach you some basic knowledge, but there's no application. And the real world of being a mortgage broker is about application. It's about logic. It's about case studies, different scenarios, understanding how you match your client to the right mortgage lender, but also give them the right advice, the right product, make sure that it's suitable, make a recommendation and give advice. So you can go and get CeMAP qualified if you go through a provider and do a course within a couple of weeks. Once you've got that qualification, you then need to get an understanding of the industry. Now, for most companies, if you go to someone like Countrywide, for example, the large estate agency, they have what's called a training academy, where they will take you through all of the learnings in order to be able to be competent and to do a good job and to give good advice. There are other companies out there who will give you very little training, not naming any names. They will show you the basics of how to use the system, and they will go and shove you out in the field without very much training, without very much support, without very much guidance, and you'll almost have to thumb your way through it to get an understanding of how to do the job. Now, I think it's really, really important that you take a role that's going to give you the education that you need. In my journey, I was with the Woolwich, so very compliant background, very good training. They put me out into a branch in the middle of nowhere where the age demographic didn't require mortgages, so I moved on. So I went from the Woolwich to Connell's estate agency, and I had a good couple of years, or a good year or so at Connell's. But again, I was at the top of the high street after all the other estate agents, and I was the last in the mortgage advisor line. So they'd already made their decision or had enough of seeing mortgage advisors by that point. So I then went to a brokerage, my first brokerage. And the problem with that, as good as an experience it was, because now I had access to loads of lenders, I was actually driving here, there and everywhere, and I could be at an appointment at 8 o'clock at night, not get home till 10, and I was required to be back in at 8, 9 o'clock the next morning, and there was no lifestyle. So I left that job very quickly, and I thought I'd go and give London a go. So I went to London, and I spent about 7 or 8 months in London, but again, getting a train at 7 o'clock to be there for 9 o'clock, doing my last appointment at 8 o'clock, getting home at 10 o'clock, you just had no life. And that's something that's really, really important to me, is having the freedom and the flexibility. So in 2005, I came back to Chelmsford, Essex, where I was close to living, and there was a new brokerage starting up, and we grew that firm massively within the first 12 months. So my background is a variety of estate agency, brokerage, banking, large brokerage in London, starting and running a firm as a sales and compliance manager over the course of 12 months before I went and set up on my own and became self-employed. So more often than not, I see a lot of people asking, I want to become a self-employed mortgage advisor. Well, what they don't realize is the difference between the qualification and the real world doing the job. It's so difficult just to become self-employed after getting your qualifications, because you need mentoring. Someone has to sign off your advice at 3 stages. So the advice process as a mortgage advisor is KYC, know your client. So the first thing you need to understand is who your client is, and you need to be able to record their information. Once you've recorded their information, you need to be able to source the right relevant mortgage product for your client. And that means understanding everything, the interest rates, the options that are available, the fees, the different lenders, the different criteria. And I can tell you now, after working on thousands of mortgages, no 2 clients are exactly the same. There's always one piece to the puzzle that is very slightly different. So once you've understood your client and you've started to match them to the lender, you're then going to provide them with what's called an illustration. Now that constitutes as advice and recommendation, because you're advising on the interest rate, you're advising on the lender, you're advising on what's most cost effective, you're advising on the fees, and that initial email or that initial email or detail of an illustration that you send to a client has to be checked. So you have to have a mentor who signs that off as good advice, as correct advice, before it goes to the client. Once it is then signed, once that's been signed off and the client's accepted it, they have to email back and accept that that is the one they want to go for. You then submit an agreement in principle to the mortgage lender, where you take all of your KYC information and you upload it to the mortgage lender system to obtain an agreement in principle. So you need to understand the difference between a soft search and a hard search, because you need to advise your client if they're doing a hard search, which could impact on their credit score. Once that has been completed, you're then going to submit an application to the lender. Now, before that application is submitted, again, it has to be checked by the mentor to make sure that that is still relevant, that is still correct, that the information you're submitting to the lender is 100% correct, and that there's no errors or omissions on the data, because disclosure is huge in this industry. Once that's then been agreed by the client and by the mentor and by the client, you can then submit the full application, during which the mortgage lender will require further documentation, bank statements, pay slips, which you would have already collated at the very beginning as part of your KYC. They will require all that information, and they will do their assessment. And once you've submitted the application and they begin doing their assessment, you have to do what's called a suitability letter, which is the summary of all the advice that you've given to your client. And that suitability letter, along with everything pre it, has to be checked as a full client journey, the A to Z. And that will actually be checked against the mortgage offer that's been produced. And your KYC has to match your illustration, which has to match your application, which has to match the mortgage offer. Now, in some instances, there are so many things that happen after the application has been submitted. The property could be downvalued. Something could crop up in a further search that means that the lender won't be willing to lend. You might have to request additional documentation. The loan amount could be reduced. All of that then is after the fact, after the suitability letter. So that's a change, key material change, which requires a file note, additional notes, additional letters to the client to justify it. And then that whole file and that whole element of advice and recommendation has to be checked to make sure that it's correct for your client. In doing that, that's going to mean that you are compliant, that you have given the best advice, and to make sure that you are therefore, you have to go through that something between 6 and 8 times in order to be deemed competent. So there is a status within our industry which everybody wants to achieve, which is competent advisor status, CAS. And that is when it gives you more flexibility and freedom to start moving around and changing company. However, as I've said on previous videos, it's not all about just looking at the percentage that your compliance company or your network or the firm that you are part of are taking. You need to understand how they are going to help you build your business. Now, all I've spoken about there is mortgage, but actually another massive part of the job, which can make up 60% of your annual income, is protection. Life insurance, critical illness, income protection, home insurance, even health insurance. And you have to go through exactly the same process around all the protection and insurance side of it as well. You have to know your client. You have to make the quotations relevant to their circumstances. The main thing is affordability. So not only that, but the mortgage and the protection has to meet their affordability. It's why we scrutinize bank statements, their accounts, pay slips. The job involves a massive research, a massive assessment, and you need to go through that process for both mortgage and protection. You can be a competent advisor in mortgage and you can gain your insurance later, or if you do it properly, you would gain them both at the same time. But the learning curve from day one is massive. And in my experience, it takes on average 12 to 18 months for somebody to become competent and actually properly able to do the job with less supervision and with less support. Because by that time you've spoken to 10, maybe 15, 5 to 15 clients per week, every week for 18 months. You've had multiple different scenarios. You've done multiple different KYC fact finds. You've done multiple bits of research. You've looked at numerous different lenders. You've assessed loads of documents because money laundering, fraud, identifying that your client isn't vulnerable, certain areas, you think about a mortgage, it's not just one mortgage. You've got purchase, you've got remortgage, you've got buy to let, you've got somebody who wants to let their existing home to move into another one, you've got serviced accommodation, you've got holiday lets, you've got commercial mortgages, you've got bridging loans, then you've got fixed rate, tracker rate, discount rate, offset, valuation fees, home buyers, full survey. There are so many different pieces to the puzzle that you need to understand, and that's just mortgage. When you start breaking that down into thousands of lenders, we use on average about 40 different lenders. When you then start looking at insurance, you've got 5 or 6 different insurance products. You've then got 9, 10 insurers that you're going to be using. Do not underestimate when you have your CMAP qualification, the amount of uphill knowledge, guidance, support, mentoring, coaching that you are going to need to get to the point where you are going to be able to earn £250,000 per year. It could take you a good few years, which is why you need to align yourself with somebody who's been there, done it, got the t-shirt, has the infrastructure, and not just that, the systems and the processes that can make you hyper efficient. Because there's many different ways that you can work for a company in this industry. You can be directly authorized, which means that company is directly responsible to the FCA. You can be part of a network where the network has direct authorization to the FCA, but you must adhere to the network's guidelines. And you must do and follow their sales process. You need to make sure that you are getting involved in building relationships, understanding your client, and giving the best advice possible. So I would hope that that gives you some insight into how you can become a mortgage broker. You need to make sure that you align yourself to the best possible company.